Very good day to you and welcome to this webinar session today. I hope you're well and keeping safe wherever you are listening in from. My name is Kevin Liu. I'm the KEO and manager at Benham and Reeves, Singapore. Today we have our regional sales director, Mrs. Doris Tan, here with me today to answer any questions you might have at the end of the presentation. Now, Doris has many years of experience in the London property market, and I myself have been with Benham and Reeves for over 8 years now. Next slide, please. So today we are going to talk about how to profit from London property. Whether you already have experience in buying London property or if you're looking to buy for the first time, today's topic is about buying into London and to ensure you buy well and come out profiting from it. So I hope this presentation will provide you with useful information. And if you have any questions, please feel free to type it in the dialog box and we will address them at the end of the presentation. So why have we chosen London for property investment? Now, London is known to be a global city for its culture, finance, and technology sectors. It is an education hub, boasting world-renowned schools and universities. It has world-class transport links with the most excellent transport network on the tube system. With the latest edition of the Elizabeth line, which is due to open at the end of the year, that line will connect the west to the east in below an hour's time. Now, London also has a transparent legal system and a business-friendly environment, making property transactions very tradable and hassle-free. London also has a multinational population of 9 million people living in the city, which makes it one of the world's best property rental markets, and this is highly beneficial to property landlords. Aside from stocks and shares, bonds, and other forms of investment, London property is considered a safe asset class to own. Based on World Economic Forum findings, London has been rated the world's most attractive city for the 9th year running, based on its ability to attract people, capital, and global businesses. Its popularity has continued to grow despite Brexit and the COVID-19 pandemic. So for those of you who do not know how big London is, this slide gives you a better perspective. London is made up of 32 different boroughs and divided into inner and outer London. Now, traditionally, investors prefer to invest in inner London. But we have also seen an increase recently in investors buying further afield, especially those who are considering relocating from Hong Kong to London after the recent London protests, and they were offered B&O passports. Now, this group of buyers prefer houses as they see better value for money there. This slide gives you an idea on the average house prices in the different boroughs of London. The tube map displays excellent connectivity in London. It has 11 different lines serving 270 stations. As you can see in the map, London is also grouped into zones 1 to 7. As I mentioned earlier, with the addition of the Crossrail or Elizabeth line, it makes traveling much quicker from west to east. Also, the Northern Line extension will be completed soon. This will include 2 new stations in Battersea Power Station and 9 Elms. All in all, adding to the comprehensive London transport links that is considered one of the best in the world. Our investors have bought mainly in central London where they are most familiar. This slide zooms into the areas where most investors would buy and where all the famous landmarks are. However, regardless of where you buy, rental demand is very strong, and we see an increase in rentals now that London is opening up again, with the universities reopening as well. Property prices will also see an increase in value, with an estimate of 3 to 5% increase per annum for the next 5 years. Rental prices are also projected to increase by 3% per annum over the same period. Now, London is an education hub with many Ivy League universities and renowned schools and colleges. This attracted students from all over the world to universities such as UCL, Imperial College, King's College, and LSE. We have seen a 9% increase in the number of undergraduate students from outside the UK and the EU, with a new record of 44,300 students starting last year in school in autumn of 2020. London has also been ranked the best city in the world for university students, according to an international ranking of higher education centers, placing it ahead of Tokyo, Boston, and Berlin. As far as tech growth in the UK is concerned, it has expanded tenfold in the last decade. Big names such as Google, Amazon, Apple, and Facebook all have office headquarters in London. London has attracted $10.5 billion in venture capital money in 2020, which is a record for the UK and Europe. UK's education technology sector also grew 4 times faster by 72% in 2020, putting the market value at almost £3.5 billion. Now, London is well known for being one of the largest international financial centers in the world. It ranks second in an international study of financial centers, despite the double whammy of Brexit and the COVID-19 pandemic. London sits behind only New York and remains as Europe's only major global financial center, above Shanghai, Hong Kong, Frankfurt, and Singapore. Some of the notable finance companies in London include JP Morgan, Citigroup, Goldman Sachs, and HSBC. Now, according to our research, London's super prime property market saw transactions hit a pandemic high in the first half of 2021. However, while there are signs of a super prime market revival, you have to bear in mind that prices are still down from an all-time high, meaning the very top end of London properties still represents relatively good value for investment. The super rich bought more homes in London than any other city in the world last year, lured by the weakness of sterling and encouraged by the conclusion of Brexit. And despite travel restrictions and 3 lockdowns, people from around the world still spend £3.75 billion on super prime London property, which means properties above £10 million. That is more than a total spend on super prime homes in any other city last year, overtaking New York and Hong Kong. That's confirming UK and London's status as the world's leading destination. Sales in Hong Kong, which had the highest number of $10 million plus sales in 2018 and 2019, fell by 27%, and while in New York, it fell by 48%. Now, even in the lockdown period, the London market continued to surprise us. UK house prices in March this year climbed 6.5% since the first lockdown started over a year ago, marking a first house price rise during a recession in modern history. While GDP fell by 10%, the total value of London property increased during the pandemic to £1.8 trillion, which is also a first. Zoopla reports that the UK housing market is on course for its busiest year since the global financial crisis. More than 1.5 million homes are expected to change hands this year. That's a staggering 45% more than in 2020. HM Land Registry also reports that property values were 10.2% higher in March compared to a year ago, and that is the fastest growth in 14 years. This shows the resilience of the UK housing market. Okay, traditionally, the spring and summer period are the best months for property activities. So it is always the busiest time of the year for real estate agencies like ourselves. The number of sales we agreed in the month of May this year was up 12% compared to last year. Our sales team have also seen valuation requests increase by 14%, and the lettings team have seen a 20% increase in rental inquiries. As the UK has now come out of lockdown, and with the return of international travel and reopening of schools, we anticipate a recovery of the lettings market, with rents gradually going back to pre-pandemic levels. Okay, now this is a very interesting slide based on a survey done by Benham and Reeves. We conducted a survey with our 3,000 plus tenants last year, and interestingly, okay, we found that tenants have reassessed their priorities now compared to pre-COVID days. Proximity to a tube station and amenities like restaurants and cafes used to top the list, along with private cinema and car parking. In the COVID-19 climate, where people work from home more often and are more conscious of physical contact, high-speed internet became a top priority. Demand for outside space and landscape gardens also became more appealing to tenants. And also interestingly, you will note that car parking is not that important, as London has excellent transport links. So people still prefer to be near tube stations, like in most other major cities. So when investing in a London property, these are the important points to note and to consider. Firstly, the developer. It is very important to buy from a reputable developer because we are buying overseas and physically we are almost 7,000 miles away. At Benham and Reeves, we represent most major developers in London with good and reliable track record. We are not just buying a property, but also getting assurance and good service level from reputable developers. Next is the location. Location is one of the most important considerations, as it will affect the property's ability to rent and sell in the future. Proximity to tube stations, along with good amenities and facilities, are features that have proven to do well with tenants renting and with sales in the resale market. Now, value for money is what you get from a London property if you buy from reputable developers with the experience to deliver high standard developments with good creativity and quality. For example, one of the features could be beautifully designed landscaping by well-known designers and landscape architects, and also apartment interiors with top quality products and specifications. Now, regeneration areas are another factor to consider if you prefer to buy in an upcoming new area where you could benefit when the development and its surroundings are completed. And most importantly, do speak with a trusted professional property consultant who can provide you proper information and insight. They should also be able to help you make your buying process as smooth as possible. Now, here at Benham and Reeves, we can help you with all of that. So how does an investor technically profit from a London property investment? Now, here are two real-life case studies we can look at. The first case was when an investor sold his property before completion by assigning his contract. Okay, now this investor purchased the property back in 2012 that cost him £500,000. He paid a total deposit of £100,000, which represented 20% of the total purchase price. In 2015, he sold his property by assigning the contract to another buyer at £750,000, earning him a £250,000 profit. The return of investment for this investor was at 250%, given that he only paid £100,000 of deposit. There was no stamp duty payable for this assignment, and this was a fantastic investment done in perfect timing. But of course, this was before Brexit and COVID-19. However, the second scenario happened during the Brexit and COVID-19 period. We witnessed how another investor made a profit during these unprecedented times. This investor purchased a brand new property in London off-plan back in 2019 because he initially wanted for his children to stay in it when they studied in London. Unfortunately, it was during the COVID-19 period when the completion took place in 2021 and they couldn't use the property. So they decided to sell it after completion. The purchase price for this property was at £1.05 million. The investor paid a 20% deposit before completion, and then he took on a mortgage loan to complete on the property. That was when he paid the remaining 80%. And shortly after completion, the property was sold for £1.2 million, earning him a profit of £150,000. This represented a rate of return of approximately 15%. This shows that if you buy well, you still have an opportunity to make money even in difficult times. It really goes to show how resilient the London property market really is. But also to re-emphasize on how important it is to buy well and to buy in a good development built by a reputable developer. So why should you buy London property now? Firstly, you will be buying in a down market in a low interest rate environment. There is consistent global market demand as London is at the center of the world. There is transparency in the legal system. It's also safe, tested, and proven by many high net worth individuals who have invested in this global city for decades. And finally, the potential sterling pound appreciation makes buying in London ever so attractive. We saw how the pound has gradually appreciated after Brexit, and investors may benefit from the currency gain on top of the capital gain. Now, in summary, we can say that London property is a bulletproof investment and is one of the world's most trusted safe haven assets. Now, before I end the presentation, I would like to tell you about who we are at Benham & Reeves. We have over 60 years of experience in the London residential property market. We have 18 office branches across London and 8 international offices, including one here in Singapore at Raffles Hotel, where we are right now today. We can offer you a comprehensive one-stop service for your London property needs, from providing advice on where and what to buy, helping with your property purchase, assisting with handover and snagging upon property completion, furnishing the property, and letting and management to the day you sell the property. We can also provide tax filing and advice, all done in-house by a team of qualified professionals. So with this in mind, if you're thinking of investing in London, do contact us here at Benham & Reeves, Singapore. Our team is headed by Mrs. Doris Tan, who has 30 years of experience in this arena. And I have been here for 8 years myself. And given our connections with all the major developers, we can assist you with all your investment needs. I want to thank you very much for listening in. And please feel free to post your questions if you have any, and we will try our best to answer them. I shall now hand the time over to Doris, who will address your questions. Doris.
Yes, thank you very much, Kevin. You did a good job, excellent job. And I'm sure everybody understood you clearly here and the importance of where to buy, how to buy, and to make profit on your London property purchase. Now, without further ado, I already have many questions here, and I'd like to address them one by one. First, from a Mr. Abdul, he asked this question of how to finance a London property purchase, and are Singaporeans subject to foreigners buying additional fees? So the answer is we can finance a London property purchase from Singapore with all the local banks here, the major banks, UOB, OCBC, Maybank, CIMB, Stanchart, and many others. And you can also obtain a mortgage from our mortgage broker in the UK. So there are many, many options for you. And there isn't any additional fees for foreigners like us buying into London property. But as all of us are non-residents, we will be paying the stamp duty on the higher bracket than the local investor or the local first-time buyers. That's the only difference. Okay, and the second question is London property at the peak now. What are the cost considerations other than purchase price? Which area is good? I think this is a very good question. London property at the peak now. London property is not at the peak now. The peak was in 2016, just before the Brexit problem. And then, of course, we had COVID now. So it's not at the peak now. So it's a good time to consider buying. And in fact, prices have dipped because of COVID. And I believe it's dipped about 15 to 20%, depending on which location. But the good news is London property is very resilient, as you have heard in the presentation. So prices have come back up very quickly, and we still see many people buying. So the prices have come back up. What are the cost considerations other than purchase price? The cost consideration are very minimal. It's legal fees and your stamp duty. That's the main cost. But like what we have shown you on the slide, Stamp duty is only payable on completion. So you can assign your contracts if you're lucky, like the example that we gave you. So you need not pay the stamp duty until completion. So the cost is standard normal, as the same as in Singapore. You have to pay stamp duty and legal fees. Which area is good? London, as we explained also on the slides, is quite big, not like Singapore. You have many zones and you have inner London and outer London. So which area is good? I would say they're all good, but of course, you have to be very careful because the banks will only finance properties in zone 1 to 4. So whether you buy in zone 5 or 6, you may have a little bit of problem of getting a loan from the local banks in Singapore. So the banks here prefer, of course, the more prime location like zone 1 and 2, but they have recently extended up to zone 4. So it all depends. But I would say, yeah, depends on your price range as well. So these are all considerations that you have to take into account. The third question is, besides London, which cities will you recommend? The entry price for London is too high for me. Okay, good. We have other cities like Birmingham, which I'm quite in favor of, because Birmingham has got, it's not overbuilt in the first place. It's only been popular in the last 3 years or 4 years when we first identified it. So I think Birmingham is attractive, and the rental yield is about 5%, gross, net 4%, and your starting price is £200,000 to £350,000, depends on 1 bed or 2 bed. So if you cannot afford a London property, you may consider Birmingham. But having said that, there are properties in London that you could buy for $350 for 1 bed in zone 3 or 400. I think that's a very good deal, and you're buying from the top developer. So come and speak with me. When is a good time to buy, sell UK property based on your analysis? That's the next question. When is a good time to buy? Okay, now is the best time to buy. You buy when there's crisis, so there's opportunity. So I feel that this is a good time for those who have yet to buy London property. Yeah, for those who own, of course, you know what is it all about, but it's really best time for first timer. And when to sell UK property? There's no good or bad time to sell UK property, because as long as you get a profit, then it's a good sale, correct? But if you ask me, if you're not selling with a profit, then it's not the right time to sell. So based on my analysis, COVID times is bad times. Now is bad times, not because of anything, because restrictions with viewings. So we have tenants who refuse access to the property. So these are hindrance, correct, for this period of time. But as soon as everything is opened up, yeah, transactions will come back up, prices will be better. So this is not a very good time to sell, but a good time to buy. The next question is, how is the movement out of cities because of remote work and studies arrangements? The movement out of cities of London, I think there's not very much movement, although there's COVID, because people work from home. London is very easy, and you got high speed, whatever, internet and all that connection. The only movement we see that some people may want to go back home or go back to their homes in outside London, where they own a bigger place, because that's where they can work and live. So they may move back to their country homes or what, but still they will keep London as as the place to come back once everything is open up. So we don't see much movements. Studies arrangements, yeah, that's a good question. Now, because London, as we shown you on the slide, London is an education hub. So of course, internationally, everybody comes to London to go to the best universities, blah, blah, blah. But because of the restrictions, people are not able to return for their studies. So a bit of properties been affected because they cannot rent. So landlord have to suffer during that 1 year period of 10 to 15% drop in the rental market. It's the same for Singapore. Even though we are not such a big city, we also encounter landlords negotiating for price drop. But this price drop was only for 6 months to 9 months, if my memory did not fail. Everything is back up now. So it's very resilient, London. Landlords only suffer for a short period of time. But the good news is, even during COVID, we rented all our properties that were completed during COVID times. It's amazing, it's unbelievable, because the moment the property was completed, it was rented out the next day, even during COVID times. Of course, we suffer 10% decrease in rental, but we still have rental. And now things have changed and we get higher rental for our landlords. So it's a fantastic rental market. Next question is, with the ongoing COVID-19 and less tax incentive for buy to let, is it a good time to sell London flats? Like I mentioned earlier, it's not a good time to sell. But during this period, all depends on how valuable the property is, right? So if you can make some money, it's okay to sell. But if it's not, then you better not sell, because things will come back up. Less tax incentive for buy to let. Because of this new ruling, less tax incentive for buy to let is not implemented yet, but it's ongoing discussion. So we still have those incentives at the moment. Next question is, what are the ways to avoid inheritance tax without selling? Transfer or sell to child, children, at how much, when? Now this is quite a technical question, but I will just summarize it quickly. What are the ways to avoid inheritance tax without selling? You are right. You can transfer the property to your child or children. At how much? It will be at market price, because you cannot sell lower. The tax authority will come after you, because when you transfer, you need to pay stamp duty. So it has to be at a very reasonable price that is not so much below market value. To avoid inheritance tax without selling. So this is one way to transfer, to your children without selling. The other way, of course, you have to sell, and restructure it. Impacts of inheritance tax. Again, this is an inheritance tax question. You are only impacted if you own more than one property that is more than £325,000, because your allowance is £325,000 for one person. So if you put your property in two names, basically your allowance will be £650,000. So if you own more than one property that is more than £650,000 and putting in lesser names, then you'll be subject to inheritance tax. So you can put up to 4 names to spread out the risk. But if you intend to own more, properties in the UK, basically you can't avoid inheritance tax, because even if you form a company now, the company will die, unfortunately. Yeah, previously the company wouldn't die. So no matter how, I'm sorry, inheritance tax has to be payable. So the only other way is to buy in children's name, or you get other names to buy. And the next question is from one of our clients actually who bought from us. How much is expected rental for Horlicks quarters? Is there a high demand in that locality? Does it matter when I rent out? No, it doesn't matter when you rent out. How much you expect? I would say 4% gross, generally in the UK, in London. So 4% gross nets about 3%. Is there a high demand? Definitely, like I mentioned earlier, all properties rented out, even during COVID times. So I'm sure we can find you a tenant immediately. So that's for that gentleman. Is there a demand for 2-bedroom flat in central London? Whether you are buying 1 bed or 2 bed, there's no problem, no issue, because like I said, they're very rentable, very sellable in London. But if you look at the prices of late, I would actually recommend a 2 bed, because a 2 bed, you get better value for money in terms of price per square foot, and also because more people looking for more space. And of course, for rental, there are sharers as well. So of course, it comes with a price, correct? So it depends on how much you want to spend. So to me, it's okay for investment, either 1 bed or 2 bed. So it doesn't really matter. It depends on how much you want to spend. Yeah. Taxation payable for foreigner buyer. This is the next question. Now, mainly there are 4 taxes to be payable for all non-residents like us buying in London. First will be income tax. For all of us who enjoy rental income, all non-residents are subject to 20% income tax. Inheritance tax, we have already explained, you cannot avoid, but you have to pay, but there's ways to mitigate. Yeah, and this will be depending on how many units you own and how many names you put them in. So you can speak to us separately on that. Capital gains tax is another tax that we have to pay regardless, because when you make a gain, you have to pay the tax as fair as that. But you have allowances. So the UK government is also very fair. The allowances given to per person is 12,000. So again, depending on how many person or how many people you put the property in. So, and of course, there are other deductions where you can deduct. So at the end of the day, there shouldn't be so much tax. And the tax bracket is all depends on your gains as well. It can be as low as 18 to 40%, depending on the amount of gains. So again, is the number. The 4th tax is council tax. And if you are buying to rent it out, it will be payable by the tenant. But of course, if you use it, then you have to pay the council tax. So these are the 4 main taxes. This is another question. I want to address all questions, yeah, because it's interesting. So bear with me. Where to buy and how to get financing for purchases? Where to buy? Anywhere. Zone 1 to 4, like I mentioned, the banks in Singapore are friendly towards lending, but you can still buy outside, even Birmingham, outer London. We do provide all the mortgage brokers who can help you, offshore bankers. Yeah, we have many ways of financing, and financing can be done through even my contact in Jersey, so depends on where you want your loan to be. Okay, there's another few questions here before we finish off. Is it better to start a company and use it to buy and own UK condo? How to get mortgage in that case? Now, is it better to start a company? Using a company to buy was very, very attractive in the earlier days where I assist all my clients in forming BVI to buy. But because of the inheritance tax, whereby you cannot avoid nowadays, so buying a name of a company has got no special advantage in a sense. But of late, we understand from another tax presentation that they are able to help you mitigate all these taxes. So that's another side of the story if you want to buy in the name of company. But my advice is, if you're buying just one property, then it's better to use your personal names. It all depends. If you're buying a string of properties, then it's worthwhile forming a company to buy. So that's what I think, but other people may think otherwise. What do you think of Watford condo as potential investment? Good question. You can buy anywhere. Like I said, they're all good potential investment, depending on your price and how much you want to spend. Again, this is very crucial. We cannot ask you to buy central London, whereby properties are millions, but you can buy outside, which is slightly lower in price and still attractive and may be able to get you good capital gains. But Watford, of course, is an area maybe the banks may have may not be able to finance. I'm not sure on Watford. Yeah. If you have £1 million, should I buy in central London or slightly further out with good commute to London City? Oh, that's a very interesting question. If you have £1 million, of course, I will advise you to buy in central London. My slogan is, and I've been singing this song for a long, long time, important is to buy well. And my case study already showed you during COVID, even during COVID, we can sell on if you buy a good piece of central London property. So speak to me if you have £1 million to spend. Next question from Mr. Eng. As all owners of UK property are affected by 40% inheritance tax when they pass away, please describe in detail how you or your previous clients mitigate the inheritance tax. Did they use joint tenancy names or onshore overseas company to purchase UK property? Mr. Eng, I have already addressed this actually. You can't avoid inheritance tax. You have to pay. So I don't know how many properties you own, but like I said, if you own a string, then it's very difficult to mitigate. All you have to do is to sell and restructure your holdings. That's the only way. Or you transfer, like the other question we had, transfer your property to your children. But if your children's names are on it, again, it's difficult. So there's no other way. Already described to you onshore, offshore. Nowadays, all companies die, so no point. So there's not much of a way to mitigate this. Okay, the next question is from Laura Huang. What is the stamp duty for overseas purchaser? This depends on the price, at what price level you are buying at. I just give you an example. If you're buying at about £1 million, it's about 8% your stamp duty. So it all depends. If it's £500, maybe it's 6%. Yeah, because we are all considered as non-resident buyers. We are buying to let and we are not living in the property. But if you're buying for first time and if you're living in that property, then of course the stamp duty will be very much reduced. So it depends on the need and depends on the purpose of your purchase. Next question is, London property is comparatively expensive. Would you consider Manchester or Liverpool for investment instead? Now, this is a question that I've already answered. I think Birmingham is the next city to look into. Manchester is good, but they have been marketing Manchester for many years and there are more supply in Manchester than Birmingham. So Birmingham is less new build, less 5-star buildings for living. So rental will be good. So maybe Birmingham. Liverpool, I think, will not attract as much what you call renters as Birmingham and Manchester. So I think that there are stories to Manchester and Birmingham because of the HS2 going direct from Euston in London to Birmingham, the high-speed train coming. So Birmingham may be more attractive. Yeah, that's my answer. What is your assessment of the Green Quarter in London by Berkeley Group? Okay, good question. Green Quarter, we highly recommend because our directors in London also bought into Green Quarter and we are the marketing agent for Berkeley Group in Singapore. So if you are interested, please speak to us and we can help you to rent the property as well because renter in South Hall is also very attractive. Like I said, everywhere is good for renter, so we can rent it out for you easily. What is your assessment of the Manchester market? I've already answered that. How do you add names to the ownership of a property which is currently in 2 names? What are the costs involved and are you able to do this for clients? Okay, if your property is already owned in 2 names and you like to add on 2 names, you can just write to your lawyers and get them to help you to include 2 other names. Basically, you're transferring the share, the value of the property into 4 names. Yeah. So it all depends. So you have to pay stamp duty on the other 2 names. Are Singaporeans eligible for the personal tax allowance of 12,000 for income tax? This question, I'm sorry, because we are now considered as non-Commonwealth. So we are not allowed. But if you're Malaysian, you're allowed. Yeah, this is was not allowed for quite a number of years already. Next question. Should the apartment be furnished prior to putting out to the market for rental or should landlord leave it as unfurnished? Now, traditionally, London property, we prefer it to be furnished to a certain level that will attract good renters. But of course, you can choose not to furnish it and then see what the offer comes in and you can decide. The difference may be very little, we don't know. So some tenants prefer unfurnished, they have their own furniture. But whatever it is, we can tailor make for you because even if we have a furniture pack already put inside the property, if the tenant say, I don't want this, I don't want that, we can take that out and take it off your price list because our sister company Instar can do all this on our behalf. So come to us, we are the best. Whatever you want, we can tailor make for you. Just like yesterday, I have a landlord who furnish it nicely to my recommendation. But the tenant say, I don't want this sofa, I don't want this whatever. We took it out and we deduct from the package. Very easy, very simple. Yeah, so every case is different, so we can help you. The next question is, if I borrow from Singapore banks to buy UK properties, will it hurt my LTV ratio for my local Singapore real estate investment? Yes, unfortunately, because with the TDSR, local banks will look into all this, but not to worry, like I said, we have mortgage brokers who can help you. So speak to us. I just heard Doris said Shell company own a property should bear inheritance tax, but it is dead already now. Why? Yeah, with the new tax regulations being implemented, even companies die. So unfortunately, they can't be used to avoid inheritance tax. There's a question from Mr. Quack. What is the minimum amount of cash that you recommend that we should have before even considering purchasing a property in London? Oh, this is a very good question, Mr. Quack. It all depends, right? Best, of course, you borrow to the hilt. That's the best. So depends, if your bank can loan you 70%, you need to put 30%. So it all depends. The best is to borrow the maximum first and then worry about that later, because you can repay your loan at any time. Yeah. So my suggestion is always borrow to the maximum. I think I'm finishing. This is the last question. There's a company Get Ground helping buyer to buy under company's name. Can that avoid inheritance tax? Yes, we are familiar with Get Ground, and you can form this company by acquiring London property, and it's very easy and simple. It's very, not just easy and simple, it's cost efficient, it's very inexpensive. But I think it's still a company, and like I said, companies still die now. So unfortunately, I don't think forming a company to buy is to avoid inheritance tax. It's for other purposes. So you can form the company with Get Ground. Like I said, it's very low cost in doing this. So it's advantage if you want to have a company in the UK. So I have actually finished all the questions, unless yeah, any more questions, I don't know, but please do speak to us. We are at Raffles Hotel. You have all my contacts. We'll post all the contacts later. And end of this month, we will also have an exhibition coming on. So look out, watch the space, and be speaking to you all soon. Thanks for tuning in. And like I said, come for individual consultation if you wish to. And we have all the best projects in London for you. Thank you very much.
Thank you, Doris. Thank you to all who have attended and listened in today. We hope that you found it useful. If you have any further questions, please feel free to contact us anytime. Our contact details are on this slide, as you can see, this final slide. So as Doris mentioned, we are here at Raffles Hotel, and we are here to help you in any way we can. So once again, thank you very much. We hope to hear from you soon. See you guys.